General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's do the chart work. So today, Thursday, the 11th. Today was unclear. Did engage. Confidence level was medium. Still think Tuesday could be high of the week, but after today with the Trump, yes, it could be Tuesday low of the week. Is expansion playing out? Not in the direction I wanted, and I still wanted May open price, but can't be a stickler. So today's price action. New York AM session, pretty just chopped. It's PM. So it started off Trump threatening Iran. Then this is the normal taco. H1. Yeah, price ain't accomplished much the last 2 days. This is Wednesday. Thursday, we kind of been sitting on previous week's low. Tuesday did all the action. And so this kind of induced the sellers. Like, I know we've been trying to sell all here. So if we were playing a long game and waited to hear the sell, but then we really just been balancing this fair value gap in the middle right here at previous week's low. Take a look at the daily. Now you see this up candle, which is today. We swept the low and closed above the high. Got this volume imbalance here. This is a good order block. So any retracement, start looking for reactions here at this wick and this open price. If this doesn't hold, then we get the sell. The thing that everybody probably wants to sell, but retracement, we respect this, any of this upper wick, then we're going back up. And this is the same. This AM chop I wrote in the journal, it's giving me Q1 vibes because this happened the whole 3 months. This thing, AM chop, PM setup, or something like that. So let's see this. This one actually got Wednesday midweek reversal, whereas we're kind of like the inside week on NASDAQ. SPY did the thing. So it's S&T as well. And this is actually, what's this, Thursday? Taking in everything. The order block is higher. It looks very bullish now from the Trump. And he said they got a deal, but price is moving, so maybe we believe it now because price. He go to SPY. He's still inside the inside bar on SPY because it don't got the electronic. So that's been hit over here. Right here we hit Thursday. We hit May open price on SPX, but on the stocks we didn't. Yeah, we got it on the stock. Nah, here on the stock we didn't get it. QQQ. You gotta respect the size of this candle. 15. Not as large a range as yesterday. Oh, it's bigger. 24 points. $24 a day. $18 yesterday. Big up volume. Nvidia to me is the standard. So it's bullish, but it ain't as bullish as everything else, like Tesla and everything. And it's like the most solid company. It's already sold out for like the next probably 3 to 5 years of products. And it's not as bullish as everything else. That shows me that everything else is just emotion, and this is where the market probably should really be. Because this is the most weighted anyway. Just the engagement, playing the Zoom model, took out the high, wanted to see these lows. We ended up getting it, but my stop was too short. You know, see prices right here, this 831, this is the ATR way up here. So the volatility is crazy high. So for me to trade right here, my stop should have been way up there. But it was the Trump, Iran, threats, this that had that AM chop going. So here, did I do well? Did I do Zoom model if I was playing? Yep. This is a good loss because it's a process loss. I would have won the trade with a big stop. Yep. Keep going, evaluating the executions. Did the framework play out? No. I was expecting us to hit May open price on NASDAQ. What do we learn about pattern narrative? I'm starting to be more aware of the chop. Yeah, that's true. Watch for tomorrow. We're just watching how price delivers because the NASDAQ is giving out a masterclass. And that's all the chart work. You'll have a good day. Peace.